Hi, everyone, and welcome to today's webinar, Understanding Financial Controls for the One-Person Business Office. So before we kick it off, there are a few housekeeping items I want to go over. So just so you know, you can maximize or minimize the webinar pane during today's presentation by using the red and orange arrow buttons. During the webinar, we definitely encourage you to ask questions. So in that same webinar pane, you can see a questions box where you can type in your question, click submit, and our presenters will be answering those throughout the presentation and at the end as time allows. You definitely want to make sure that everyone has good audio. So if you're using a telephone, please select the phone call audio option. And if you're listening through your computer today, then please select the computer audio option. And if you're joining us today for CPE, just a few reminders, make sure you're using your own personal computer, no smartphones, you're logged in with your own unique URL, that you're logged into our online software for at least 50 consecutive minutes, and that you actively respond to at least 75% of today's polling questions. So today we're going to have 4 polling questions. Make sure you answer at least 3, and then make sure you also complete the evaluation survey at the end of the webinar. And today's learning objectives are to identify the most common internal control findings for schools, discuss the ideal best practices for smaller schools, and prioritize which controls to change and when. And with that, I'll go ahead and kick it off to today's presenters.
Thank you. So I'm Monica Pels. I'm a partner in our audit practice, and I really specialize in working with schools. I help schools with their accounting needs. It could be just technical consultations or technical accounting assistance, as well as audits and implementing financial controls and best practices.
Aggie, why don't you go next?
Okay, I'm Aggie Malter, President and CEO of Pays BOA, Philadelphia Area Independent School Business Officers Association. We're delighted to partner with Armanino on these webinars that are so helpful for our member schools. I'm particularly looking forward to the webinar today because I know whether you're a one-person business officer or a business office of 10 or 12, there are still concerns about internal controls that you'll be able to think about how your operation is keeping your resources safe. So thank you so much to my cohorts at Armanino for joining us today.
Hi, this is Eric Thomas. I'm a director in our consulting practice here at Armanino. My group does outsource finance and accounting. I have a corporate background specializing in process engineering, risk management, and I really love doing these types of webinars, just focusing on simple changes that can have a big impact to an internal control environment and process improvements. Great to be talking with you today.
And my name is Dean Quiambo, partner with Armanino. Been working with our private school practice for almost 19 years. You might have seen me speak at NBOA. I've been a frequent speaker there for the last 8 years. So we've done some webinars there, and we've done a couple of Pays BOA webinars. So we're very excited to be here. And I think as we set the tone for today's presentation, I think what we think about is, you're in a small school business office, it's one person, and God forbid something were to happen. You would want to say, well, it wasn't me. It can't be me. We have some controls in place that is a stopgap for all of that. So that's kind of the tone we want to take in today's presentation. And with that said, we'll get started.
Yeah, so Dean is basically our resident celebrity here joining us on the panel today.
Oh my, here we go already. So a quick snapshot of who we are. We're the 22nd largest CPA firm in the country, and we definitely try to have an innovative perspective. We do work with over 800 nonprofits and over 200 private schools. It's a big niche of ours and something that we're very passionate about, and hopefully you can see that in today's call.
All right, so we're going to kick it off with some of the most common internal control findings that we have as we're out working with our schools, our clients, and prospects. And those cover governance. We're going to talk about cash. We're going to talk about budgeting and forecasting and some tools that you can implement there, as well as the nitty-gritty accounting. We'll get into some record keeping ideas, and finally, cybersecurity, which is a big hot topic these days. So we're a little bit out of order on our slides here. So I'll just talk about fraud. So why does fraud happen? Fraud is really something that is a risk at all organizations. And what you see here is a fraud triangle. So the fraud triangle is really sort of stepping into the mind of the fraudster. So everyone put on your fraud hats and really start thinking about how fraud could potentially occur at your organization. There are three essential things that need to exist. These three areas need to exist in order for an ordinary person to commit fraud. This is something, if you're an accountant or you've been through school, this is absolutely something that you've learned. And the first is you look at the base of this fraud triangle. The first two things that need to exist is there's got to be pressure. Usually this is with someone who's really in a position of trust with the organization. And they have some sort of personal issue that they just feel like they can't share with others. And there's a pressure that exists. It could be a financial pressure. It could be maybe there's an addiction, gambling. There's some sort of motivation that
A health issue sometimes that happens. A family member could be sick, or a family member could be going through something really hard, some kind of heartache, and they feel like, I have to do this, right, Monica?
Yep, absolutely.
And then you did say a key word that I wanted to touch on. Monica said trust, right? This is a person at the bottom of the fraud triangle. There's always a lot of trust. And unfortunately, trust is not an internal control. If I could, if there's a couple key takeaways you're going to take away from today, that would be one. Trust is not an internal control.
Absolutely. Yeah. So once you have that pressure, there's an incentive or motivation, then there's also got to be an opportunity. And more often than not, the opportunity is really the lack of controls at the school.
Yeah, that's right. And that's what we're going to spend a lot of time today. There's going to be we're trying to put a lot of meat on the bone of, okay, well, how do you protect yourself as that single person or as that small business office to say, we have the right controls in place and the opportunities aren't there for us to have committed any kind of misappropriation or anything like that.
Yeah. So when there's both a pressure and an opportunity, which again, more often than not, a lack of internal controls, then you have to have, the person needs to rationalize their actions. And this can start off innocently, if you will. This could start off with a justification of, I'm just going to borrow the money. I just need it for a short, limited amount of time with an intention. It could be a genuine intention to pay the money back. But often this just escalates. The stealing, the fraud continues, the amount gets more and more. And so there just isn't the reality that the person can actually pay the money back. So that rationalization exists, and this can start and scale from my intention is to pay it back, all the way to I deserve this money, some sort of justification that they deserve the money more than the school does.
And the typical profile of the person that commits this fraud is not a career criminal. It's someone that has been with the organization for a long time. This is their first time committing a crime. They're only able to do it because they have that trust. It's not someone that's going from organization to organization and embezzling money. It's someone that's trusted, stable family. There's just something that's changed that has pressured them into doing this.
And what should one-person business officers look out for when looking at that fraud triangle? What should they sort of take note of?
Well, I think the key items you want to look for are you aware of any significant changes in an employee's financial position? Are they suddenly driving like the brand new BMW to work, where you're not sure where that large influx of money came from? looking for significant changes in a financial position.
Never taking vacation.
Yeah, that happens a lot. Never taking vacation, and then just also just all the different opportunities, and we're going to get into that. But again, sometimes or someone else goes on vacation and they fill in a role and they realize that, hey, there's no controls around this, and once something comes through, then they realize, wow, that went through on accident and nobody picked up on it, and they keep on doing it. So I think it is all three you want to see. If there's changes in their life, and if there are opportunities there, if there's pressures there, or rationalization. I think it's kind of all of them. And then the other ones, sometimes people just feel underappreciated and overworked, and that is their rationalization already.
And what we're really focusing on here is something called occupational fraud. There are different types of fraud, but this one is really when there's an employee who's taking out an action against the organization, their employer. And so these are the types of occupational fraud that can exist. You've got fraudulent financial reporting. This is where there's a goal to mislead someone, where an individual is concealing generally maybe fraud that they've already committed. And this can also take place when there's some sort of pressure to report a certain way from maybe the board or other stakeholders or the community. And the median loss with this fraudulent financial reporting for organizations is about $800,000, so it's pretty significant. The second type of fraud, which is the most common, this occurs in 90% of these types of fraud, is an asset misappropriation. So this is stealing. This is when an employee is stealing assets of an organization. And while this is the most common, the median loss is lower. It's about $100,000.
And this one, and since it's the most common, we should also say that the most common ways to detect fraud is through a whistleblower as well, right?
Yep. Yeah, we're going to talk about some best practices for whistleblower policies as well. And then finally, we have corruption. So this is when an employee is misusing their power and influence to generate a personal gain.
And we've seen this as well, unfortunately, at schools, whether it's kickbacks through construction contracts or things of that nature, or it's misuse of school employees. But we've definitely seen that as well, and things to be on the lookout. Okay.
All right, so we're going to dig in a little bit in more detail with that most common type of fraud, the asset misappropriation. So under this category, you've got 9 different subcategories, if you will, 9 different types of activity that can occur. The first is skimming. So this is when someone is taking a payment before it's even recorded in the school's records. And this makes it very difficult to detect, right? Because the payment, the money, the cash is being redirected for their own personal use.
And here's an example in the school environment, Monica, that we see a lot is think about the annual fund checks that come to your school that say SMS, right? And nobody knows it's coming because it's a donation. And as far as the donor cares about, all they care about was, did I get my acknowledgement letter, right?
Yes.
And so if they get an acknowledgement letter, then that's fine. And if somebody had the opportunity, they could just go ahead and set up an account with the same acronym as SMS. And as long as that person got that acknowledgement letter, no one knew it was coming because there's no receivable on the books, and now you have skimming.
Yeah, and I would say this is one of our more common recommendations to improve internal controls is when those monies come into the development office or who's ever in charge of development at a school, where they're also responsible for sending out those acknowledgement letters, because you've got sort of one person responsible for receiving the money and then also issuing an acknowledgement letter. So they just have too much control over that process. The second category or subcategory is cash larceny. So this is This is really stealing that payment. Now it's already been maybe recorded in the school's records, and it's been deposited. But the way to catch this, if it's happening, is really making sure you're doing timely bank reconciliations. And what we see here, evidence of this could be long-standing, unreconciled items on the bank reconciliation. A deposit in transit, an outstanding check, something that has been hanging around for months and months and months. All right, and then you've got the area of billing. So this is really fraudulent vendors. And Dean, this is what you were talking about, where you've got a maybe vendor who's set up in the records, and that vendor is just a slight change in the name of an actual vendor that the school works with.
Yeah, we see this one all the time. I actually, unfortunately, had a CFO of a private school. She was asking me for quotes for an audit for 3 or 4 years, and she never got back to me with an answer. And then a couple years later, I got a voicemail from the board chair. And I said, oh my gosh, they're finally going to make a decision. They're going to pick us as their auditors. And I said, yeah. I said, are you guys? Do you want to move forward with the audit? And she said, no, Dean, I don't know what you're talking about. We're calling you because we think we have vendor fraud.
Sad. Yeah, it's really unfortunate when that happens. And the area here where you want to be making sure that you're doing as a business officer is reviewing the vendor payments, looking for names that are just slightly different from an actual vendor that you have. Significant fluctuations in payments over the year.
And if you're the one person business office, and we want to give you all the answers here. So if you're the one person business office and all the cash receipts come through you, then have somebody at the receptionist restrictively endorse those receipts. If you're the one person business office and you are in charge of all cash disbursements, then maybe have your head of school look at monthly disbursement reports or quarterly disbursement reports so that there is a check on the amount of dollars that are going out every month to every vendor.
Because this vendor fraud can actually be very long lasting.
Yeah, this is baked in the budget for sure.
Now, it's not quite as long lasting as the next area, which is payroll fraud. And this can be the longest running type of fraud, from 24 to a 36-month scheme that can be going on before it's detected. And this is where you might have one person in charge of setting up new employees and payroll, as well as reviewing payroll, updating pay rates, salaries. This is a fictitious employee. And this can also encompass fraudulent overtime hours, inflating the amount of hours that someone's working if they're an hourly employee.
Yep, we see this all the time. Another one we've seen is someone giving themselves a raise when there's no one to review, and then when that person comes back, they adjust the salary back. So another thing that we can do is have a board member or the head of school, or add someone who doesn't have access to the payroll file to review a quarterly ledger.
The best one I saw was at a large organization. As people left the company, they disabled their HR record and kept their payroll record active, and just changed the direct deposit information to the person's personal bank account. And they got up to 15 people on their own personal payroll before they got caught.
Oh my goodness. All right, expense reimbursements is something that we're pretty familiar with. So this is fictitious documents related to expense reimbursements, maybe putting through the same reimbursement twice, double receipts. This encompasses credit cards too, if someone's using their personal credit card for expenses and then the school's reimbursing. This is another real frequent recommendation that we make with the schools that we work with.
Yeah, and I would just say here is again, it's a challenge and nobody really likes it, but that's why it works. Original receipts go a long way. And then number two, have someone outside the highest level of reimbursement. Sometimes we have the CFO is asked to approve the head of school's expense reimbursements. That's a position that doesn't make sense because they report to them. We ask that the board chair do it on a quarterly basis, just one level up every single time, do it quarterly. And I think that acts as a good control there.
Yes, because ultimately what we want is that review and approval flowing upward through the hierarchy of the school. All right, the next item is check tampering. So this is when someone alters the payee or the check amount on an outgoing check. And we see this happen more often than not when there's like a desktop QuickBooks in place, because you can go back and change the payee. What we do is, to identify if this is happening, is we'll always review the cleared check and ensure that the payee and the amount are the same as what was originally issued for the organization, for the school.
Yep. And so if you wanted to have a control here to make this work, have somebody review the bank reconciliations, select, maybe it's the head of school or someone like that, select a random sample of checks and just tie them through. But if the head of school can do that, if you felt concerned that, hey, somebody could think that I'm doing that, then have someone pull in that procedure.
Yeah, I had a situation happen where the person in charge of issuing the disbursements was printing a report that had the vendors, the payees, and the amounts. That report was being reviewed and approved, and then just a series of checks signed. And then the actual checks before they were printed were changed to personal accounts to pay off PG&E bills and personal credit cards. All right, the next is cash register disbursements. And here's where we're really looking at cash register disbursements. This might be a point of sale situation where you maybe have a bookstore or some sort of situation where you're getting cash for, I don't know, students coming in buying a sweatshirt or different types of items from the school. Cash is used, and then the register documents are changed and altered afterwards. There could be a cash on hand situation. This is a classic situation of just stealing the cash that's sitting in petty cash, in your petty cash drawer. And then finally, there's non-cash larceny, which is really the theft of inventory, equipment. This could be office supplies. And on the more serious side, this is theft of the school's information, the school's data. This could be donor data, employee information, social security numbers, which is a real significant risk.
Yeah, it's actually one of the biggest trends risk that we're seeing today in the nonprofit space. All right.
So how do schools become victims to this kind of fraud? We have here management and board members being trusting. What we look for when we're working with our schools is a board who's engaged, a board who asks questions. The risk, if you have uninvolved board members or board members who are more aloof to these types of situations, is that there's not that tone of the top. There's not the oversight over the school's best practices.
When you're looking at a single business office or organization, the management and board have to be involved. That this internal control responsibility can't be put on one person. So you're going to see a recurring theme as we go through the rest of this, and that's just getting management board members and even non-management board members, the local office person, the teachers, they can all assist in preventing fraud.
Yep, that's right, because the audits, most audits don't catch fraud.
And we really want you to be talking about it. Talk about the board members, brainstorm. How could these things happen at our school, and what are some of the preventative processes that we have in place to help mitigate the risks? There's also a common misconception that a financial statement audit is going to catch fraud, and ultimately and that eliminates the fraud risk. What you need to know, I'm an auditor. I've been auditing for almost 25 years, and this is probably the most common misconception. Our financial statement audits are not meant to detect fraud. In fact, less than 10% of frauds are discovered from the financial statement audit. And this isn't because we're bad at what we do. It's just because the financial statement audit isn't designed to detect that. And really the most effective way to identify fraud comes from whistleblowers.
So this next slide is not something we're going to go through in detail here, but we will go through these items in the coming slides. But we love to give this to our audit and outsourcing clients because it's something you can post on the wall. You can use this as your just visual checklist to really achieve that top left tone at the top governance. It's nice and visible, and you can use this as a takeaway from this webinar. Let's jump in now.
Yeah, I think if you started with this as your roadmap and just checked off the things that your school already does and maybe already does well, and then you can set a priority for what are the next 1 or 2 things that we want to check off the list, items that are easier to implement and give you the biggest efficiencies and best controls.
So before we jump into how we do that, we wanted to go through some quick real life examples. There is a single business officer in Georgia that opened up his own bank account with, as we were saying, a name very similar to the school. This is the ultimate skimming. Over 21 months, he skimmed $269,000, and the article doesn't get into as much governance as I would like, but it did talk about how they just were behind. The timing was perfect. It was done from one audit to the next. It got baked into the budget, and it just took them some time to find it. And then if we go to the next slide, it's not just, here's 3 examples that I wanted to put on here to show that it's not just the accounting person or team. It can be anybody. So there's a school in Vermont where a non-accounting person stole $30,000. As Dean was saying, someone was on vacation, saw the opportunity, and just started picking away a little bit at a time. But the next 2, I think, are very important because this Epic Schools, it's a charter school. The founders of the school set up Go Students and pulled out, they're not sure, they think it was between 5 and 10 million over a couple of years. And then that school is now closed, as well as the Mount Tamalpais school. The founder there had moved to Florida. She pleaded guilty to stealing over $1 million. She led that school for decades after founding it, and now the school is closed. So this can be at all levels. And that's why it's important to have that internal control structure.
And ultimately, it's the families and the kids that lose in these situations. All right, so let's talk with how to mitigate these risks, right? Governance. We're going to start with governance, and with the ultimate goal is we want to protect the school. We want to protect the students and ensure that there are accurate records, there are good controls in place to really allow for sound decision making by those who run the school. And there's a tone at the top. You're going to hear us say that probably over and over again, but that's where it really starts. It's the board, it's the head of school. Maybe your school has a finance committee or an audit committee. And we really want to ensure that they are setting the tone for the culture of the school that emphasizes the importance of these activities. So the first item that we see where there's some opportunities for improvement relates to minutes of board meetings or other committee meetings. And what we recommend here is that there's formal written meeting minutes maintained. Oftentimes we'll go into a school and we'll see that there is no evidence of those written meeting minutes. And the risk there is that a key decision could be made, maybe to take out new debt or to enter into a certain capital campaign, communications with families or donors. And you want there to be a trail of these key decisions that are made. The next area is adhering to set terms. And what we mean here are term limits for the chairpersons of the board, maybe chairs of certain committees. If there's maybe a 2 to 3 year, which is the best practice that we see, 2 to 3 year limits for those chairpersons, we want to ensure that you're adhering to those set terms, which can be very challenging, especially if you have members of the board, members of those committees are their parents, they're volunteers, they're members from the community. How do you infuse new members into the boards every 2 to 3 years? But we really do think this is important because you want to have fresh eyes, you want to have fresh ideas really flowing through those boards and committees. The next relates to auxiliary accounts. This is a really important one, especially as you have parent-teacher associations who are out in the community, they're out fundraising, generating revenue for your school. We want to ensure that all those accounts are on the school's records, that those are also being reconciled and reviewed, and that there's an authorized signer on those bank accounts.
And also the thing there that we see a lot of is that the recorded activity is the net, right? They want to put in all the receipts and all the expenses in one account. Well, that's one of the easiest ways to budget for fraud, is that everybody just says, well, hey, every year we get $20,000 from that event. Well, you know what? Yeah, you get $20,000 from that event every year because there's 10 grand of fraud in that event every single year. So I would tell you, book the income and book the expense. That will go a long way.
Absolutely. You want to ensure that there's transparency and enough detail to evaluate the activities. And oftentimes with that, you could maybe have an awareness if there is a lot of discussion about maybe you have an annual event, an annual bake sale, where community is saying, wow, that was the best event we've ever had. There just seemed like there was so much excitement and so much activity and way more involvement, and yet that activity still generates the same amount of net revenue.
Yeah, I would say this is, while we're discussing best practices, this is almost a standard practice. Almost every new school client we bring on does this, and they have got great justification for it. The board is used to seeing it reported that way. It's easier. They're really just concerned about being able to match up their revenue to expenses. But we always convince them that you can create a report for this, but you really need to break it out to show the expense, the revenue, to be able to prevent exactly what we're talking about here.
All right, the next one, cash reserves. So we have 2 months here, and I'd say really there's no right number of months. There's no ideal amount of months. All we want you to be doing here is thinking about cash reserves. Think about the liquidity of the school. And again, if without accurate records, without the detail, the transparency that we were just talking about in the revenue and expense, you really won't know what the true liquidity for the school is. All right, next we've got formal written evaluations. So this is a situation where oftentimes the business officer is also wearing the human resource hat. And we want to emphasize the importance of protecting the school as it relates to HR situations, whether it's an employee some sort of personnel issue. Maybe there's justification for a raise or lack thereof a raise. We did talk about that fraud triangle and justification. We want to ensure that formal written evaluations for employees are maintained.
We had a quick question come in and says, for auxiliary groups, does that include PTO, parent-teacher orgs, events? Yes, that absolutely includes those events. You definitely want to budget the income, budget the expense, and track all of it at gross.
All right, moving on, tuition assistance. Ultimately, we think that tuition assistance decisions should be made by the head of school and the business officer. Even when maybe the process or data collection related tuition assistance is outsourced to an agency, ultimately the head of school and the business officer should be making the tuition assistance decisions. Then we've got those fundraising activities. You know, fundraising is it's really a supplemental income source. And this is really an important factor and involves a lot of education, right? Educating the parent group, educating the donor base that inherent in private education, there is a tuition gap. And that tuition gap is most commonly funded with fundraising activities. We're going to talk about budgeting a little bit later, but you want to ensure that you're able to generate those cash reserves, that there is a surplus, and oftentimes that is dependent on those fundraising activities. And then finally, having a solid whistleblower policy. Having a whistleblower, whether it's a line or an email that can ensure that there's an anonymous way for whistleblowers to raise issues to the board, and that the board is really taking those issues seriously.
This is something that seems hard, but there are incredibly affordable options for whistleblowing. They charge you very little minimum per year. It gets reported to the board, so it's not one person, but it's very easy to set up an anonymous whistleblower line for your organization.
All right, so we've got our first polling question.
Great. So our first question is, how confident are you in your internal control environment? So confident, somewhat confident, or not confident? We'll give everyone just a few moments to get their questions in, or answers in. We'll go ahead and close the polls.
How are we looking?
So it looks like most people are confident.
Good.
That's great. Well, hopefully for those of you who are somewhat confident and where you see some opportunity for improvement, this webinar will help you. Now, governance, that tone of the top, governance, all the areas we just touched on involve cash. And there really needs to be a discipline at your school regarding adequate cash controls, which is a challenge. We've mentioned in a one-person business office, how do you ensure that you've got segregation of duties around cash? We're going to talk about collections, counting, and depositing. How do you ensure that you've got adequate segregation of duties? And what we're going to emphasize here is for the business officer, don't feel like you're all alone. Take advantage of other resources that you have, whether it's someone in your office, the front office, maybe someone on the board who could assist with just having a second set of eyes over these activities. So collections, so this is incoming cash, and some common deficiencies that we see here with collecting of cash, which could be, again, it could be from some of those auxiliary activities. It could be paying for summer programs. It could be tuition that's maybe paid in cash. Certain families still like to use cash. The common deficiency is when there's just one person in charge of collecting and then maintaining that cash.
So this is something that we're calling it cash, but it covers credit cards as well. And a lot of you may be using something like a Square or a Stripe that makes it very easy to collect mobile payments. It's also very easy, they all look the same, to just slip your own one out of your pocket. Often it's connected to someone's personal phone that is then wired into the bank, the school's bank account. It can very easily be swapped out occasionally or for certain periods of time during the collection period, particularly at fundraising events, to wire that directly to their own account. So it's always good to have two people involved in these activities.
And that includes the count sheets, ensuring that if there's an event and cash is coming in, that you've got two people responsible for counting and sort of signing off on the amount that's collected.
So Monica, if we're talking about single business officers, and we just said two, who would be another good person to use in that collecting and counting process?
Yeah, you can use someone who's, maybe you have a parent who's in charge of running the particular event, be the second set of eyes and tracking the amount that's collected. And then depositing the amount with taking, whether it's cash, whether it's checks, taking that money to the bank. This isn't just ensuring that the assets of the school are protected. You want to ensure that the total amount that's collected is actually what's being deposited. But this includes the safety of the individual taking the money to the bank as well and making the deposit. There is a personal risk if there's a significant amount of cash or funds that are being taken to the bank. We want to make sure that the individual is safe as well. Okay, cash disbursements. Another area where we see opportunities for improvement. We often have recommendations on best practices here with checks and cash disbursements. We are looking for two signers, dual signers over a certain threshold that's set by the school. And you can't rely on the bank here to ensure that there are dual signatures every time a check is written over an amount that's within the policy of the school.
Banks do not look at that anymore.
They don't.
Even the signature, it's all done with OCR. There's not a person monitoring your checks anymore.
I've seen checks clearing the bank with no signatures. Actually, that happens more often than we would like to think it does. But remember, the bank isn't in the business of enforcing your school's internal controls. You really want to take that on in-house. And then access. So whether there's check stock maintained in a safe or a locked drawer, you want to make sure that there's not one individual who has the access and custody, as well as the authority to sign those checks, and that same person also maintaining the accounting records and entering the records into the accounting system. And then finally, best practice, do not make your checks out to cash. You don't want to make sure that they're written to cash.
This next slide is a nice takeaway, just to remind you so you don't have to take notes of best practices for your cash disbursements.
In these first two areas, cash counts and checks, those best practices, those are really preventative controls that you can implement within your school. The third area, the review, bank reconciliations, cash reconciliations, that's really a detective control. So if your preventative controls don't work, at least you've got some way to detect and correct incorrect transactions. All right, so here's some best practices around budgeting. Eric, I think sometimes you see that school activities are budgeted for losses.
Yeah, there may be a loss overall. That unless there's an extenuating circumstance for that year, that's obviously not sustainable over a long-term period. You're going to need to develop, increase your developing or fundraising activities. Overall, you should have a 5-year plan that is updated. If you have a capital campaign, you need our capital expenses. You've got to have a budget for that. Even if you're just budgeting at the P&L level, those items are going to hit the balance sheet. It's going to affect your cash to some degree. You have to include it. And if you've got auxiliary programs, don't budget them at a loss. You know, these are often for the benefit of the students or the parents. They need to understand that if, in order for the activity to continue, it has to generate positive cash flow.
And oftentimes this is just a change in mindset, you know, really changing your mindset to be thinking more long-term. And the school is a business. It's not unreasonable to set your budgets for a reasonable surplus.
So some of you may be thinking about lost leaders, right? So you may have a transitional kindergarten program that is run at a loss to up your enrollment. That's fine, but you have to have a defined counter to that in your overall budget so that you're not running at a loss.
Great, and we'll go into our second polling question. So the question is your board treasurer involved in your organization's internal controls? Yes, somewhat, or no? Okay, and we'll go ahead and close the polls.
Well, that's great. That's all higher than what we normally see here, Monica.
Yeah, 60%. That's fantastic. We're very happy to see that your boards are so involved. All right, let's move into that accounting function. So often seen as burdensome, these bank reconciliations and account reconciliations, but still very important. Eric, do you want to talk about some of the issues you see with these account reconciliations?
Yeah, you know, the biggest one is that they're only done at the end of the year to prepare for the audit. If we go to the next page, these are our best practices and problems that we see. So the first one, you need to review your financials against the budget and trend on a monthly basis. If you're not, there can be problems that can just take way too long to identify. It can put you in a bad spot, and then the money can be gone with no way to claw it back. The offsetting to that is on the review your posted journals monthly. Look at those journal entries to verify that it's the actual activity that is making you, putting you in alignment with your budget and trend. We recently saw a client that had a controller who did no accounting during the month, and he just booked accruals to get to the budget. And so the CFO was looking at it and the head of school and seeing what they expected to see, which is what everybody wants to, right? So like thinking, wow, we did a great job budgeting this year. This is in perfect alignment. And then it turns out there's 9 months of activity that needs to be recorded. Monica, I'm sure you see this a lot. You do a great job of accounting, but then you don't lock your periods. And the next thing you know, the auditors come in to do your audit. And the first thing they say is your net assets your beginning net assets don't tie to your ending assets. What did you do? And then you find out you've booked 30% of your journal entries to the prior year period.
Yes, and that's the first place we start, is making sure those that end of year and then beginning of the next year doesn't change from cycle to cycle.
Yeah, and we advise people to go to the cloud as much as possible. You know, this is, once you put your records in the cloud and they're paperless, someone else has the responsibility of maintaining those and keep having co-locations. When you have paper, you're subject to force majeure. You've got to keep everything organized. You've got to basically run a library to make sure things get put back where they are. If it's in the cloud, it's in the cloud. Water can't ruin it. Fire can't ruin it. Your auditors will be happy. It should reduce their costs because you don't have to pull it. Everything is easier in the cloud. And most importantly, reconcile your high-risk accounts timely. I didn't see it in the article, but the example where the person stole $270,000 by the extra bank account, I can guarantee you that they did not reconcile those bank accounts every month.
Yeah, and one way to be real practical about this, especially if there are limited resources in the business office, is to focus on those high-risk accounts, net assets, cash for sure, receivables, payables, and create a financial statement close checklist, like a monthly checklist that allocates the processes that need to be completed and who's going to be responsible for those, not just from a preparation standpoint, but from the review and approval as well. Record keeping is an area where we often have recommendations for improvement. The first relates to tuition contracts. Sometimes we see that there are customized tuition contracts, in order to work with a particular family's needs. And we really recommend that you keep a written evidence of the tuition contracts.
Minimize handshake deals as much as possible. That's my best practice here. It's easier for you and it reduces fraud, the potential for fraud.
And we are seeing that these are tuition contracts are being moved more and more online. Even with the online activities, you do have an opportunity to download each of the families' tuition agreements, tuition rates, and make sure that that is maintained, that you could have the head of school or board review that and approve that, and then just keep that in your records. The unmaintained records, these are those personnel records that we were talking about. We want to ensure that personnel records are complete, they're updated, they contain evidence for not just performance evaluations, but this could include retirement benefits, retirement elections. The worst case here is that you have an employee who separates from the school and then they claim that they have had a different retirement election, and without proper record written evidence being in the personnel files, there is a risk that the school could be responsible or held responsible for some sort of lost earnings. And then finally, maintaining evidence of canceled and voided checks. I mean, mistakes happen. You have a run that goes, wacky from the system. If there's a situation where you have to cancel a check or void a check, you want to make sure that you are maintaining those defaced checks on hand so that they cannot be reissued.
And just a simple check log. Before we go on from here, real quick, Monica, we had a question. How long do you recommend holding on to past tuition contracts?
From a documentation standpoint, I tend to think of a best practice of 7 years for all documentation. I think that's what the IRS recommends. Eric, any difference of opinion there?
7 years, but put that in the cloud. Do not put yourself into the document storage business.
Good point. Okay, cybersecurity.
So we've been focused primarily internally. Let's look outwards for a little bit. Cybersecurity becomes a bigger threat every day. What we see most often is that schools do not have a security plan. They have a security plan that is not shared with the employees. They have weak passwords. So the recommendation is now to use passphrases, so longer passwords, 14 to 20 characters that are changed less frequently, because that reduces the practice of written and highly visible passwords. We've all seen the monitors with all of the passwords attached with Post-its right there, so they're nice and easy to use. Well, there's no point in having a password once it's posted on your monitor. Do not share accounts and passwords. I know it's easier, but it's not good. And do not make sure you disabled old employee accounts as part of their termination process and checklist. The software should, for any software, bank account, what have you, it can take a while with the bank, realize that, so get on it right away. Disable those accounts. And the reason we're doing all this about the passwords and the old accounts is that there are bad actors out there whose full-time job is to hack into email, bank accounts, network accounts to go in there and commit fraud. What we often see is people hack into an email account, they monitor it for what can be months, wait till the person goes on vacation and then send an email for an urgent payment to a vendor that is similar, or a vendor payment terms, the ACH information change. Because that email is received while people are on vacation, there's less diligence applied to it, and often those payment go out, and then you're unable to claw it back.
Yeah, I'm really seeing a rise in that sort of activity at the schools that I work with. And I think one of the more common risks here is that a school might outsource the technology function, outsource this, or have a part-time employee. And while that responsibility might really fall under the purview of the business officer is likely not a technology expert, not an IT expert. And so those specialists really operate in a bubble. No one's really overseeing or evaluating the work that they're doing or the policies that they're enforcing for the school. So we recommend reaching out to board members, reach out to parents. Someone is likely to have an IT background or have more experience to at least do an evaluation of the policies of the school.
All the major insurance providers are providing cyber insurance now. It's the best. You should have some. It's affordable. You need to review it yearly, your policy, and make sure that you're actually getting the coverage that you need. It's a highly dynamic and fluid space, and the insurance providers are monitoring it more closely than anyone and changing their terms. It's not like your typical insurance policy to protect the school for liability. Your riders and your terms are going to change on an annual basis.
Can you guys just talk a little bit about the number of passwords that business officers have to maintain? So the business officers have the keys to all the kingdoms, right? They have HR passwords and multiple ones. They have bank accounts. They've got, insurance policies. They've got all of these different passwords. Can you recommend a way for one-person business officers to keep passwords safe and protected and all together somewhere?
Yes.
Or should they be all together somewhere?
Yeah, so the old practice was just to use the same password for every account you ever had.
And that password was password.
Right. No, it was password one.
Password.
Because you had to use a letter or number. So we've moved on from that. There are a number of very affordable options they're called password managers. So you have to remember one password to get into your password manager. It's usually, it works as an add-on to your browser because most of these passwords are being accessed through web pages. And what happens there is you log in for the first time, what have you, it'll prompt you and say, do you want a secure password? And then you get a password that's maintained in your manager that is not hackable, right? If you put it into a calculator, it would take like 1 trillion years because it's 25 characters long and it's got all the special characters, different capitalizations, and it's very, very secure. That's what we recommend using. Password manager. It mitigates all that risk and it gets you down to one password that you have to remember.
I know folks who keep like a spreadsheet named something unusual, and, do it that way. But again, if somebody gets into your files, you've lost everything.
Yeah, I had an Excel file. It was named passwords.
Yeah.
It was very convenient, but it was basically a digital Post-it. It was a monitor with digital version of a monitor with Post-its all over it.
Right.
I finally moved to one called LastPass, and it's made my life a lot easier because I had one for work and I had one for personal. And now I have just the one password manager for everybody.
Yeah.
Great suggestions. I'm just going to briefly mention the disabling of old employee accounts because I see this often when I go into schools and I'm just looking at general controls. This happens if you have turnover, and oftentimes, while it's a sad situation when an employee leaves, you might forget that a particular employee had access to sensitive data. So ensure that you're reviewing when an employee terminates, what specific access did they have to systems, to accounts for the school, and that you're disabling those.
So we had a question that says, do you feel that Dropbox or Google Sheets/Docs are safe? I would say they're as safe as anything can be. Those companies, certainly Google, have enormous resources to protect them. But again, if you're sharing passwords to get into those files, they're not safe. You can also password protect documents that are in there to get further encryption. But it's only as safe as your best practices around the security for those Dropbox, Google, or any other online account.
Thank you, Eric.
Okay, so we'll go into our third polling question. So the question is, what aspect of improving internal controls do you find most challenging? Is it we don't have enough volunteers, we need more training, we don't know where to begin, or none of the above? We'll give everyone just a few moments to get their answers in. We'll go ahead and close the polls.
How do those results line up with what you see in the audit space, Monica?
So we don't know where to begin. Hopefully we've given you some real life, tangible steps that you can take to begin. Training, absolutely. I think that is one of the most common challenges that schools have is how do we get the training? And then volunteers. I mean, I think that these are consistent with what we see. All right, I think we can move into wrapping up. We talked about our fraud risk. I think we're going to jump into one last polling question.
So the last one is, has your organization implemented a formal fraud risk assessment policy? Yes, no, or I am not sure.
And while people are answering this question, can you guys talk a little bit about the separation of governance and management in a smaller school where there may be a one-person business office? We're always on the guard to keep the board members sort of out of the day-to-day, and yet to maintain good internal controls, we sometimes have to ask board volunteers to get involved with day-to-day.
Yeah, we've actually been making that recommendation, right? Reaching out to board members who have a particular expertise who could benefit the school. I think it is a benefit to the school to have those resources on the board that are available. And then we want to ensure that there's a rotation, that there's an influx of new board members, chairpersons for the board to come with that fresh perspective every 2 to 3 years. Did we answer that final polling question?
Very good.
All right.
Okay, so We'll send out a digital version of this that has additional items or additional pages that support what we are further detail what we've discussed. Thank you all for attending. Thank you, Philadelphia Area Independent Business Officers Association, for joining us today. Dean, is there anything you want to add?
No, absolutely. I think that we put a lot of quote unquote meat on the bone for people to think about today. But if you have any questions, please feel free to reach out. The questions that we couldn't get to, we will go ahead and email you back. And we hope to see you. We know that the Pays BOA always has a great event and gathering at MBOA, so we hope to see you there in person.
Absolutely. And thank you guys for, giving us these tactical solutions to some of our really big problems in our schools. So we look forward to continuing our conversation with the folks from Armanino in the future.
Thank you.
Thank you so much.